Hi, I'm Adam Sussman, Director of Research at TABB Group, joined today by Emmanuel Carjat, Managing Director of TMX Atrium. Emmanuel, we don't need to tell the audience that we're in a pretty, bad environment for the brokerage industry, with volumes being down, commissions being down. As a result, it's well known that folks are looking at their infrastructure, looking at where they can take out costs. One of those areas is connectivity, obviously. From your perspective, where is the industry trying to reduce the cost of connectivity?
Right. So a lot of what we're seeing at the moment is in the equity specifically, customers looking at their current infrastructure, the infrastructure that they've deployed, which they manage, they can fully outsource to a third-party provider that will then have the economies of scale to provide a solution at a cheaper price, yet provide the same bells and whistles that they're currently enjoying.
So, for example, this would be U.S. brokerage firms looking to replace the connectivity to the U.S. equity exchanges.
That's right. Yeah,
right?
Their main market.
So, our understanding is that in the past they've been spending a lot of money trying to build, low latency connectivity. Right. I guess the belief was in the past they needed to do that on a proprietary basis?
That's right. And a lot of the low latency that's been built in the past was on the belief that you couldn't get anything better than by doing it yourself, having the full control. And what has happened since then is that you have firms like ours that are able to provide an infrastructure which is just as good as doing it yourself. And in an environment of low volume, well, it makes tons of sense to just outsource and get better pricing and same quality of service.
So speed has been somewhat commoditized, I guess.
It has, I guess you can say that, and it's also a level playing field. I mean, the amount of routes that are coming up where you can really materially gain an advantage over your opponent are significantly reduced.
So, ironically, I guess the arms race has actually leveled the playing field in a sense.
It did, and you have firms like us that, because it did level the playing field, are able now to come in and provide an infrastructure that's just as good as anyone else.
Yeah, it's interesting. I'd heard that recently that one of the dark fiber routes between New York and Chicago had actually drove a lot of people to develop the microwave route, right, since you could distribute broader access through the microwave route rather than through the dark fiber. So again, this arms race, it's faster, but it's also more democratic in a sense.
It is. And the other thing is that you have this extremely low latency that is now microwave, but that's really reserved to an elite.
Right.
A lot of the orders do not need that sort of extremely low latency.
Right.
You need good latency, but in an environment where volume is down to such levels as we're seeing today, good latency is absolutely fine. That's not where the brokers are making the difference.
And so does this mean that they're not investing in accessing new markets? I mean, we talked earlier about Canada and Moscow and the need to access these commodity-driven markets. How is that playing out?
Right. So no, it doesn't mean that investment is gone. It just means that investment is shifting to other markets where effectively we see our customers enjoying much higher returns on their investment. Commodities market, Canada and Moscow being one. But generally speaking, playing at the frontier of the markets is what we're seeing. Warsaw is a recent example. So a lot of our customers are looking at where else can they trade, where the markets are not necessarily so crowded, or where they can gain an advantage by having a lower latency.
And is there a segment of the market that you think has been more aggressive in trying to establish connectivity to new markets?
I would say equities, generally speaking, in terms of an asset class. And then if you're looking at the type of firms that are going in there, right, high frequency trading, quantitative trading, generally speaking, are probably the most aggressive.
Excellent. Well, thank you for joining me today, Emmanuel. This has been Emmanuel Carjat, Managing Director of TMX Atrium, and myself, Adam Sussman, Director of Research at TABB Group. Thanks for joining us.